What's up investors, my name is Artem Dikarov and in a couple of minutes you will know what are 7 main differences between stocks and options. I'll first give you a professional definition and then I'll explain it as easy as I can with examples. And if you want to learn personal finances and investing watching such short videos, please consider subscribing to my channel, liking this video to show the support for the young creator. Many more videos are coming. Thank you so much and let's get straight to the point. Alright, so the difference between stocks and options is the type of such assets, as well as what these assets represent, how you profit from owning them, strategies and taxes. And if you want to know what stocks or options mean individually, feel free to watch my previous videos. And here is an example. The first and the main difference is the asset type. Stocks are securities, more specifically equities, while options are derivatives. The value of an option is based on or derived from the value of an underlying security. The second difference is the strategy. Stocks can be traded or invested in. There are many different strategies that you can experiment with, but the idea of holding stocks is basically the same, which is to buy low and sell high, or sell high and buy low in case of short selling, while the strategy of dealing with options is basically betting on or against the performance of an underlying security. If you buy a put option, it means that you assume that the price of an underlying security will drop. Alternatively, if you buy a call option, it means that you think that the price of an underlying security will go up. The third difference is the holding period. You can hold stocks for as long as you want. You can even pass them to your kids and to your grandkids so that your family will own these stocks for centuries. As long as the company exists in the future, obviously. But options have expiration dates, meaning that you need to exercise your right whether to buy or to sell before that date. After expiration date, you don't own this option anymore. So as you can see, the holding period for options is rather short. The fourth difference are the rights that holding such assets provide. If you own stocks of a company, you become a small owner of this company and you receive some rights, which means that you can participate in shareholders meetings and even vote. Some companies pay dividends, and if you're holding shares of such companies, you're eligible to receive dividends as well. Options do not give you any of these rights. The fifth difference is the flexibility. If you own stocks, they can either go up or down. Under regular conditions, you profit when the value of your stocks goes up and you lose money when the value of your stocks goes down. Basically, that's all there is to it. But options allow you to profit from many different market conditions, as well as creating additional value. You can protect yourself from sudden price drops, as well as ensure cheap prices for skyrocketing stocks. You can also receive premiums from writing options and selling them, in addition to holding profitable positions. As you can see, options provide you more flexibility. The sixth difference are commissions, fees and taxes. If you're a long-term classic investor, you make very little unnecessary payments. Modern-day brokers offer commission-free trading, and governments usually give you tax advantages if you're holding your stocks for a certain period of time. Besides, there are several investment account options that offer you tax benefits, such as but not limited to Roth IRA in the USA and TFSA in Canada. While options trading always comes with mandatory fee payments and commissions, in addition to premiums that you have to pay when purchasing such assets. Also, because you're not dealing with securities but with derivatives instead, governments do not offer you any tax advantages. Your income is taxable as a regular income. As you can see, options trading comes with big commissions, fees and taxes. And finally, the seventh difference is the difficulty. Buying and holding stocks is very easy, especially if we are talking about investing in ETFs. No financial or investing knowledge is required in this case. But options trading is complicated. It requires, to say the least, advanced knowledge of finance and investing. It is also much riskier than regular investing because the majority of trades are done under assumptions and predictions. And if you still have any questions after watching this video, feel free to leave a comment and I'll personally reply to you. Check my other videos to see if there's anything else you want to learn about personal finances and investing. Thank you all so much for spending this couple of minutes with me. I really hope there was something new that you learned today and was straight to the point.